greed is a basic part of animal nature. Being against it is like being against breathing or eating.
That's Ben Stein, right? I mean, that's certainly one way to kick off a conversation.
It is, and it sets the stage perfectly for what we're doing today.
Welcome back to the Deep Dive. We are tackling the absolute monster of the trading world today, greed.
Oh boy.
But before anyone rolls their eyes thinking we're about to give a lecture on morality, let me just stop you right there.
Please do. Because telling a trader to be less greedy is, well, it's like telling a sprinter to run slower.
Or a boxer to stop hitting so hard.
Yeah, it's completely counterintuitive. It doesn't make any sense.
Exactly. I mean, if you take away the desire to make money, you don't have a trader. You have a hobbyist. So our mission here is purely a performance analysis. We are not here to save your soul.
We're here to save your P&L.
That's it. We're going to look at why greed destroys portfolios, but more importantly, we're going to argue that what you think is greed is usually something else entirely. And that's the big takeaway from the research today. We use greed as this, catch-all term for bad decisions. It's a lazy label.
Lazy label, I like that.
Because the data suggests that most of the time, greed is just a mask for, say, fear or anger, or even some deep-seated confidence issues.
And we have a system to fix it. We're going to break down a technique called mapping that turns this messy emotion into hard data, and we'll walk through 4 case studies that, honestly, they changed how I look at my own decisions.
But first, we have to define the beast.
We do, and you can't talk about greed without talking about Gordon Gekko.
Of course not. The patron saint of the movie Wall Street.
Everyone knows the line, greed is good, it's on t-shirts, it's on posters, but what the source material points out is that we all have this collective selective hearing. We leave out the most important part of that sentence.
We do. The full line is, the point is, ladies and gentlemen, that greed, for lack of a better word, is good.
For lack of a better word, that changes the whole texture, doesn't it?
It changes everything. He was basically saying he couldn't find the right vocabulary. He was using greed as a placeholder.
And the research argues that the word he was actually looking for was
ambition.
Ambition. Okay, so let's try to parse that distinction, because when you're in the heat of the moment sitting at a trading desk, they feel exactly the same.
Right. If I want to make $1 million, is that ambitious or is it just greedy?
Let's start with the dictionary, which actually fails us here. Merriam-Webster says greed is a selfish and excessive desire for more of something than is needed.
And for trading performance, that definition is, it's useless.
It's totally useless. Then is needed. Who decides what I need?
Exactly. And selfish is completely irrelevant to how markets work. So the source suggests we strip away all the moral stuff. Get rid of selfish, get rid of then is needed.
And what are we left with?
An excessive desire for more.
Okay, an excessive desire for more. But I'm still going to push back on that. Michael Jordan in the 90s had an excessive desire to win every single game.
A massively excessive desire.
We don't call him greedy, we call him the Joti.
We call that drive. We call it hunger. And this is where the source uses a sports analogy that really clarifies the line.
Okay.
Think about an offensive lineman in football. The big guy up front. His only job, his whole strategy, is to protect the quarterback.
Right. Block.
Now, say there's a fumble. The ball is on the ground. Ambition is that lineman diving on the ball to secure it for the team. It's the right strategic move.
It follows the game plan.
Yes, but greed. Greed is that same lineman trying to scoop up the ball and run 40 yards for a touchdown because he wants the glory.
And he's not a running back, so he's probably going to fumble it again.
Exactly. He's abandoning the strategy for personal glory. That's the line. If you're following your risk plan, you're being ambitious. The moment you ignore risk to force a result because you just have to have it,
that's greed.
That's when your desire has made you stupid.
Ha! Don't let desire make you stupid. That's a bumper sticker right there. Okay, so this leads to the core idea of this deep dive, which is that most of the time we're not actually being greedy, we're just reacting to some other emotion that's wearing a greed mask.
This is the masks of greed theory. The idea that greed is almost never a standalone problem. It's a symptom.
Okay, let's walk through these masks. The first one is fear. This feels like a contradiction.
It does. Greed and fear feel like opposites. But think about FOMO. Fear of missing out. You're watching a stock just go parabolic. It's up 20% in an hour. You see people on Twitter celebrating. You get that tightness in your chest.
You feel like you're being left behind. Everyone's getting rich but you.
So you buy. You chase it right at the top. From the outside, that looks like pure greed. You're chasing fast money.
Right.
But internally, What's driving you is panic. It's not the potential profit, it's the fear of being excluded. You're not greedy for the gain, you're terrified of the boat leaving without you.
So the behavior looks greedy, but the engine is fear. That makes a ton of sense. Okay, what about the next mask? Anger. I feel like I see this one all the time. The revenge trade.
Oh, this is the classic downward spiral. So let's say you have a great plan. You enter a trade, and you get stopped out by one single tick.
Ugh, the worst.
The market just nicks you, takes your money, and then, to add insult to injury, it immediately rips in the direction you predicted.
It feels personal. It feels like the market is mocking you.
It feels like you were robbed. So what happens? The red mist comes down, you immediately double the size of your next trade.
And you're thinking, I'm going to make it all back, and then some.
But the motivation there isn't accumulation, right? It's vindication. You're angry, you're trying to force the market to admit you were right. That's anger wearing a greed costume.
A very, very expensive costume. Okay, the third mask is confidence. This one seems like it cuts both ways.
It does. On the one hand, you've got overconfidence, the God complex. You're on a winning streak, you feel invincible. You stop using stop losses because you just know what's going to happen.
That's the F-it mentality. Just bet the farm.
Yeah, but the more insidious one, and the source spends a lot of time on this, is actually a lack of confidence.
Now, this one is actually, it's kind of sad when you dig into it.
It is. This is the trader who's using their P&L to validate their own self-worth. If they don't make a certain amount of money, they feel like a failure as a person.
So they're chasing money not to buy things, but to buy.
Self-esteem.
And the market is a terrible place to go shopping for self-esteem.
The absolute worst. It's far too expensive.
So we've got these hidden drivers: fear, anger, insecurity. But let's get practical. I'm at my desk, the market's flying around, my heart is pounding. How do I actually spot this in real time? I can't just pause and have a therapy session with myself.
No, you need real-time indicators. And the source points to one primary symptom, a tell, that works almost every time. It's a very specific shift in focus.
A shift from what to what?
From execution to outcome.
Break that down for me.
Okay. A trader who's in the zone, a healthy, ambitious trader, is focused on the chart. They're watching price action, volume, support levels, the technicals.
You're right, the process.
When the greed mask slips on, their focus shifts entirely to their account balance.
I know this feeling. You stop looking at the candles and you start staring at that little unrealized P&L number just ticking up and down.
And you start doing the math in your head. Okay, if this goes up another 10 cents, that's $500. I can buy that new watch.
I can pay for that vacation. You're spending the money before the trade is even closed.
That is the reddest of red flags. If you catch yourself fantasizing about what you're going to buy, you've left the world of strategy and you've entered the world of greed.
The source also mentions letting winners run here, which is tricky because, cut your losses, let your winners run is like the first commandment of trading.
It is, but the intention is what matters. Are you letting it run because the chart says the trend is still strong? That's ambition. Or are you letting it run because you want a home run you can screenshot and brag about?
So moving your profit target further away for no good reason other than you want a bigger number.
That's greed. You're ignoring the market just to satisfy your ego. The source calls this the unquenchable thirst. That feeling that you must make money right now.
And the market just punishes that intensity.
Every single time.
So we know what it is, we know the symptoms, let's talk about the fix. The source details a system called mapping. The goal is to turn this vague, messy feeling into a data set.
Right. You can't manage what you don't measure.
Yeah.
And it's a two-step process. Step one is just data collection. For a few weeks, you basically become a detective of your own mind.
So you just keep a journal next to your computer.
Exactly. You write down everything. What's a physical feeling? Is your leg shaking? Are you holding your breath? What are the words in your head? Is it, I need this to work? You just gather all that raw data.
And then step two is where you organize it. You create a 1 to 10 severity scale.
This is what makes it actionable. You take all those notes and you categorize them.
Yeah.
So a level 1 is mild. It might just be a fleeting thought about the money. You know, it'd be nice to lock this win in.
It seems pretty harmless.
Functionally, it is harmless. But it's your early warning system. It tells you the emotion is starting to wake up.
Okay, what's a level 5?
Level 5 is moderate. Maybe you start wondering if you should move your profit target, or you notice you get really irritated if someone interrupts you while you're in a trade.
And then there's level 10, the tilt.
Level 10 is a total loss of cognitive control. Mentally, you've abandoned all long-term thinking. All that matters is making the money now.
And technically, what's that look like on your screen?
You zoom all the way in, you stop looking at the hourly chart, you're staring at the 1-minute candles, micromanaging every single tick. You've completely lost the big picture.
The idea being, if you know what your personal level 2 looks like, maybe for me it's tapping my foot, you can stop it before it gets to level 10.
Exactly. You can't stop a freight train when it's going 100 miles an hour. You have to stop it when it's just starting to roll out of the station.
I want to get to the case studies because this is where the theory really clicked for me. The source profiles 4 traders who all thought they had a greed problem, but this mapping exercise revealed something completely different.
Yeah, these stories are great because they put those masks into a real-world context.
Let's start with Alex, who they call the perfectionist.
Right, so Alex was a pro, 16 years of experience. His symptom was that he would obsess over hitting these huge P&L numbers. He'd be up $5,000.
And he'd hold out for 6. And then the market would turn and he'd end up losing it all.
It sounds like textbook greed, right? It's never enough.
Totally.
But when he dug into his map, the real cause wasn't a desire for more money. It was a fear of being wrong. He was actually underperforming because he was too scared to pull the trigger on his entries. He would hesitate. So when he finally got into a good trade, he felt he had to squeeze every last cent out of it to make up for the ones he missed.
So the greed was just a cover-up for his lack of confidence on the entry.
Exactly. Once he fixed his hesitation problem, the need for the home run it vanished.
Wow. Okay, then there was Roderick, the Avenger.
Roderick is the perfect example of anger wearing the greed mask. His pattern was he'd take a loss and then immediately force a huge trade to make it back.
We've all been there. And he tried to fix it in a really interesting way.
He did. He thought, okay, I'm just being greedy for money. So he saved up a massive cash cushion. He figured if he had a year's worth of savings, he wouldn't need the money and the greed would go away.
But it didn't work.
Didn't change a thing. Because the root cause wasn't financial insecurity. The root was that Roderick just hated making mistakes. He saw loss as a personal failure, an insult.
So he wasn't trying to pay his rent with those revenge trades.
No, he was trying to repair his bruised ego. He was just angry at himself for not being perfect.
That's a huge distinction. You can't solve a psychological problem with a financial solution. Okay, next up is Max, the prover.
Max's story is great because his symptoms were so subtle. He was jumping into trades a little too early, and he always had this thought that he wanted to change his month with one single trade.
Go big or go home. And what was the root cause for him?
A deep lack of confidence. He had friends, investors, family all watching him, and he felt like a fraud. He wanted that one massive win to prove to everyone and to himself that he was a real trader.
And what I loved about his story was his specific level 1 signal that he found on his map.
Oh yeah, this one is so common. He realized his level 1 greed signal was simply checking his P&L too often.
That sounds so minor.
But think about why you do it. If you trust your strategy, you don't need to check the balance every 30 seconds. You check it because you need validation. You need that little dopamine hit.
And that little action was the seed that grew into the big destructive trade.
He found if he just stopped checking the balance so often, the urge to swing for the fences just faded away.
Incredible. Okay, last one. This is Chris, the haunted.
This one is, it's the heaviest for sure. Chris had this habit of just ignoring his profit targets, always trying to turn a good trade into a grand slam.
Which usually means you just strike out.
Right. But the cause was past trauma. A full decade earlier, he had sold a stock too early.
Oh, I think I know where this is going.
A month after he sold, the company got acquired. He missed out on millions, life-changing money.
That leaves a scar.
It haunts you. And for 10 years, every single trade he took, he wasn't trading the market in front of him. He was trading against the ghost of that mistake from a decade ago.
So his greed was just a desperate attempt to go back in time and fix that one single error?
That's it. And it shows you can't just grit your teeth and be more disciplined.
Chris didn't need a new trading plan. He needed to process that old regret.
It's why that greed label is so dangerous. It just stops you from looking any deeper. It's just the check engine light. When that light comes on, you don't put tape over it. You pop the hood. Is the engine overheating? That's your anger. Are you low on oil? That's fear.
If you just ignore the light, the car breaks down, the account blows up.
And this brings us all the way back to that athlete analogy. The Force uses a great image of a thoroughbred racehorse.
Walk us through it.
If you think your own ambition is bad or greedy, You spend your whole career fighting yourself. You're like a jockey, just constantly pulling back on the reins of a powerful horse.
You're just wasting energy and slowing the horse down.
Exactly. The goal isn't to kill the horse. It's to fix the underlying issues, the fear, the anger, so you can let that horse run as fast as it possibly can, but inside the rails of the track.
It seems like the great irony of all of this is that by wanting the money less, or I guess by needing it less in the moment, you actually end up making more of it.
That is the ultimate paradox of trading. The market can smell desperation. When you need that win right now, you force things, you ignore risk, and you lose.
But when you can detach from the outcome
And focus only on the process, on the quality of your execution, the money just follows. It becomes a byproduct of excellence.
So here's our final question for you to think about, and be really honest with yourself on this one. If you could stop worrying about the money you could make on your next trade, if you stop fantasizing about the car or the vacation or proving someone wrong, and you focused only on executing your plan perfectly, would you actually make more money?
All the data suggests that, ironically, the less you need the outcome right now, the more likely you are to get it.
Something to think about. That's it for this deep dive. Thanks for listening. We'll catch you on the next one.
Trade safe.